Hey, what is going on everyone? Sunny Decree here and welcome back to another episode. Just to make that clear at the beginning of the video, no, I'm not the biggest fan of everything that Binance is doing. But we have to admit that their futures platform is popping off. Just compare this real quick. We have on Bybit a 24-hour turnover of approximately 60,000 BTC. BitMEX, which is still obviously the number one, 205,000 BTC. And on Binance already, although this platform is quite new actually, already 85,650 Bitcoin turnover in the last 24 hours. So in this episode, I'm gonna bring you the Binance Futures trading platform a little bit closer. First of all, I will explain once again what is shorting, what is longing, why it even makes sense to go short and long with leverage, what is the potential, what are the risks, and obviously I'm going to go a little bit more into detail what are the main differences between those contracts here on Binance Futures compared to the inverse perpetual swaps on Bybit and also on BitMEX. And now let's jump right into it. Now let's start off with the basics. What does it mean to go short or long with leverage? Quite simple. To go short means selling Bitcoin. To go long means buying Bitcoin. With leverage means that you're only coming with a certain collateral and you can actually trade more than you actually have. But if the price is not moving in the direction that you betted on, you can actually get liquidated, so you can lose everything. So compared to spot trading, where you can never lose everything except for Bitcoin would be going to zero, in futures trading with leverage you actually can. Now let's have a look at a certain scenario. Let's say for example you believe that right now the price of Bitcoin is about to drop. So currently we are at approximately $8,000, but the price itself does not really matter all too much. So here we have time and here we have the price. So you think that at this point right now Bitcoin is about to drop. So you enter a short position. So basically you're selling Bitcoin in here, in this case with a 20x leverage. We're going to come to that later on. So let's say for example you only have to bring $1,000, but you can bet on the price of Bitcoin, the downfall of the price of Bitcoin with $20,000. Okay, but if the price goes up, well, at some point there will be a liquidation price, and if the price goes above that liquidation price, well, you are getting liquidated and your whole collateral is gone. But obviously if the price of Bitcoin is going down as you expected, well, you're making nice profits, and you're obviously making more profits as if you would have with just selling BTC for $1,000 because you're on 20x leverage. Kind of makes sense, right? The other way around, it is exactly the same. Let's say, for example, you're betting on the price of Bitcoin to go up. Once again, here we have time and here we have the price, and the price is going sideways in here. But now you're actually entering a long position in here, again with a 20x leverage. This leverage is the only leverage available on Binance. And here in this case, exactly the same. There will be a liquidation price, but this time obviously below the current price level, because you are betting on the price to go up. So as long as the price go up, everything is all right. You're making nice gains. 20 times more gains as you would if you would be trading on spot, to be exact actually. But if the price goes down, well, at the liquidation price in here, you're going to get liquidated. That means all your money is gone. Your whole collateral is gone. So that is basically shorting and longing with leverage. But now let's get a little bit more specific and start off with how to do that on Binance Futures. To start off, we have to know how to open up a Binance Futures account, because you actually have to enable this. So if you're in your Binance dashboard, all you have to do is you have to go over here and go for Futures, and then once again Futures. Checks Futures is another futures exchange which Binance acquired. Maybe we're going to talk about that in another episode, but today we're talking about the real regular Binance Futures exchange. You go on Futures, and now I have to move my camera a little bit because below me there you can actually find the buttons to enable your futures exchange if you're doing this for the first time. Also, if you're not sure what exactly you're doing, or if you have a question, you can always go to the help function. You go to info, you go to guide in here, link opening up in a new tab, and here obviously you can also read how to open up a futures account and everything else like that. And as you can see in the bottom in here where I just showed you on the exchange, you can open up your futures account. Also in the exact same corner, you can actually find this little button in here which says transfer, and that is how you can actually charge up your balance here on the Binance Futures Exchange. What's very interesting, if I hit transfer in here, you can see that here we're talking about US dollar tether that you have to add and not Bitcoin. We're going to come to that later on, but this has something to do with the contracts. Those are not inverse perpetual swaps. Those are just perpetual swaps. To make that quick, they are not getting settled in BTC. They're getting settled in US dollar tether in this case. So it makes sense why you actually have to transfer US dollar tether to this exchange. I can already tell you this is the biggest difference between the contracts from BitMEX, Bybit, and in this case, Binance. Now, what are the actual benefits of futures? A lot of people out there are just using futures for gambling with super high leverage. On Binance, you only have a 20x leverage. If that is good or not, that is up to you to decide. For those people who are trading on Bybit and BitMEX already, you know that, well, a 20x leverage seems actually quite risky, if you ask me, but that is just my personal opinion. I like to take a little bit higher risks. But the advantages are that you can actually trade more as you actually have. So let's say, for example, you have 10 BTC and you are long BTC because you hold them, but you want to hedge, right? You only have to invest 0.5 BTC, in this case with 20x leverage, to hedge a short position against your long position holdings. So you can bet on the price with less money. And as I already said, you can hedge your long position only with a fraction of your Bitcoin. Also, it's very important to point out the risks, but you guys know how it is. And as I explained to you already, if you're getting liquidated, your money is gone. Make sure you're trading responsibly. Make sure you're not trading with your whole HODL position, not your keys, not your Bitcoin. If your Bitcoin or your money in general is on an exchange, well, that's a third party. And remember why we are in Bitcoin. So do it as I do it and only trade with a fraction. That is what I personally recommend. All right, now let me repeat the order types real quick and what you actually need. We have limit orders. Limit orders are only getting triggered if a certain limit is actually getting hit. Then we have market orders. Market orders are getting executed immediately to the current price. Then we have stop limits to set your stop loss, for example. What is a stop loss? Let me explain that in painting here real quick again. Well, let's say, for example, you know exactly that here is your liquidation price, but you want to get stopped out if the price is not moving in the direction you want to. Let's say you were going long here, but you think that, well, if the price falls below this line, well, you want to get out of that position. So that would be your stop loss in here. And that is exactly what you do with those stop limit orders. And also we have a take profit limit to take profits at certain trigger prices. So nothing special, but just a good advice. If you're not sure what you're doing, then rethink what you're doing and test it with lower amounts or on test nets. It's very important to understand those market orders, but we have been discussing those for quite some time actually. It's a little bit different on every exchange, but you will figure it out, that's for sure. Now let me talk a little bit about those contracts on Binance. You're actually not trading actual Bitcoin, you're trading contracts. Now what does that mean? That means, as futures are, at some point in the future they are getting settled. But with perpetual swaps, there is no specific date. You can always settle them yourself with a market close, for example. I do not recommend that. Obviously you should be using limit to save fees and stuff, but you already know that procedure, right? So what the main difference is compared to BitMEX or Bybit here is that those are also perpetual swaps, but they're not inverse. That means you're not getting paid in BTC, but you also don't have to pay BTC. You're paying your margin, your collateral, but you're also getting your profit in US dollar tether, okay? So those are regular perpetual swaps settled in US dollar tether and not inverse perpetual swaps as they are in BitMEX and Bybit, for example, where you're getting paid and where you also have to bring the collateral in BTC. That is the biggest difference. Also, what's very important to point out is on BitMEX and also on Bybit, you can change the leverages from 1 to 100. On Binance so far, you only have a 20x leverage available. Or I was just too stupid to find out how to actually change the leverage. But I think so far only a 20x leverage is available. Just to be clear about that. Now, before we're going to jump into a live trade, I just want to explain my position in here real quick. Here we have the symbol BTC US dollar tether, the size 0.1 Bitcoin. My entry price was $8,058. The current market price at $8,100. And here you can already see my liquidation price that we were talking about earlier on. This is a long position. So obviously on the way down at some point, I'm getting liquidated. And my current PNL at the moment around $7, around 18%. If you hover over PNL, you can see what that is. unrealized profit and loss on this position calculated based on market price and return on equity percentage. So there are two factors which are important in here. If I would market close in here, I would close at approximately those 18%. Right now we're just talking about 16% because Bitcoin is very volatile, obviously. But here also the funding is included, okay? The funding means that every 8 hours, you can see that over here, the payment rate exchange between the buyer and seller for the next funding. So that means if more people are short, then the shorters are paying the longers every 8 hours. But if there are more longs, the longers are paying the shorters. That is to keep the balance. We have the exact same thing going on Bybit, and we have the exact same thing going on BitMEX. That is just how those futures contracts, those perpetual swaps are doing it. I mean, the exchange has to keep a balance. That's why funding exists. So just to make that clear, if you are betting against most of the traders, you get a lot of money for funding. But yeah, I don't know if that is a smart idea. That's up to you. So what I'm going to do right now is I'm pretty much just going to open up the exact same position. I'm not going to work with limit buys in here. I'm going to work with market buys so we can do this live. But once again, if you're doing this, or the more professionally you're trying to do this, well, the more you should go into limit orders. That's for sure. You want to be a market maker and not a market taker. You want to be one of those waiting in here to get filled instead of just filling right into the spread. But we're going to do the exact same thing. We're going to go long in here, 0.1 BTC, margin required. It says in here $42. If you think about the 20x leverage, that makes sense, right? So we're going to buy long in here, and that is exactly what we're doing. Our position is popping up in here. Obviously, due to the fee, we are starting off with a negative P&L in here. And what we're doing right now as well immediately is we're going to set a stop limit because this is very important. You can already see the mark price currently is 8,100. We entered at this price right now, a little bit higher actually. And the liquidation price is at $7,654. So we want to make sure we have a stop loss above that. And we can say, for example, if you have a look at the chart in here real quick, this is just an example right now. Don't take this analysis too serious. But we want to say, for example, okay, if the price of Bitcoin goes below this wick in here, below 8,100, we want to be stopped out. We want to close this position, and then we want to have later on a look for a new position maybe. So what we're doing is we're going to go to stop limit in here, and then we're going to go to stop price to the short side because we are long right now, and obviously we want a short to get out, right? So we enter a stop price in here of 8,100, and now it is important to understand that your order is not going to get triggered. So your short, your selling is not going to pop off if the price is not going below or to the level of $8,100. And the price is at what price level you actually then want to sell. So let's say, for example, 8,090. If this makes sense for you right now or not, that is up to you to decide. And the quantity would be 0.1 BTC, sell short, and then we can actually see right now here in open orders, we have a trigger condition of $8,100. Before that, before the price is actually going back down to $8,100, nothing happens, and then we have a limit price of $8,090 for exactly 0.1 Bitcoin, and that is our current position. So that is pretty much all of it. Now, if you are interested in getting started with trading futures on Binance, make sure you check out the link down below. You can save 10% on your fees, and that should actually be permanent. Once again, you can save 10% on your fees. Make sure to check it out. Thank you guys very much for watching this episode, and I hopefully see all of you in the next one. Bye.